it's your first day at work, and I think it's exciting because the company has just announced some good results for the past year. In your opinion, what kind of a business do you think you are inheriting, so to speak?
Yeah, I mean, you say it's my first day at work. It's actually my 15th day at work. So, so I've had a chance to, over those 15 days, to get to know the business a little bit. Although what I have learnt is I've got lots more to learn. My family and I moved over on the 11th of July, and so during that time we've been settling in, and also I've managed to visit Tanzania, managed to visit Uganda, and also spent time with the Kenyan team talking about some of the big opportunities within their businesses. There's absolutely no doubt that it's been a fantastic year for EABL, and therefore, you know, the task is to emulate that. And one of the things that I think typifies excellent leadership and a really well-run business isn't just the results in the year that the business has just had, but some of the momentum that's in the business and some of the ideas for further growth that is available to us in financial year 17. And I see that falling into 5 areas. The first one is around innovation. You'll see in the report there's lots of progress on innovation with double and triple digit growth right the way across all 3 business units, which is fantastic. But when you look at some of our market positions, in particular in Kenya, our job is to continue to surprise and delight the consumers of our brands with new ideas. And so I see much more potential and opportunity for innovation right the way across the 3 business units.
Now, let me
Sure.
ask about the next thing, which is growing the mainstream beer. And as you talk about how you're going to grow that, there's a concern of the 43% excise tax,
Yeah.
which has of course had an impact on the prices.
Yeah.
And I think EABL has been very consistent to say that Kenyan consumers are very price sensitive. So
let me talk about mainstream beer in a context of tax then. So you're absolutely right. Tax rose on beer by 43% in December, and it took our bottled beer business in Kenya from being flat to actually being in decline in the second half. So, you know, Kenyans rejected the increased price that the tax levy had on beer. So we have a responsibility to contribute taxes. I think the issue is how do we find the sweet spot of ensuring we have the right level of tax and maximising cash revenues through volume. And on this occasion, the tax increase actually had the opposite effect of the desired impact, which was to increase revenues. What actually happened was volumes dropped so much that we disappointed. It was disappointing for our own business. It was disappointing for Kenyan consumers. And actually, it was probably disappointing for government as well, because increasing revenues through tax actually had the opposite impact.
Let's talk about investment in production capacity, which I know is the next priority that you're looking at in 2017. What areas are you focusing at?
So the high quality problem we've got is that we've outgrown our capacity. And so when you get volume growing at 25% the way it did last year, and with more potential that we've recognised, then we are currently looking at investment papers to increase our capacity right the way across the region, actually. So there's 2 big opportunities in Kenya. One is to increase our beer manufacturing capability and capacity, and that's an investment that I'm looking at with the finance director right now. There's also, we've reached capacity on our spirits business here in Kenya, so we're looking at investing further capability and capacity in our spirits portfolio in Kenya. And then thirdly, there's, we're doing really well in Tanzania. We grew volumes by 12% last year, and we built market share, and that has put us in a position whereby there's an opportunity to invest further in the Tanzanian business through capacity in Dar es Salaam.
What's in plan for export markets, Rwanda, East DRC, South Sudan?
Okay, so let me take those each in turn, bearing in mind I'm on day 15. But I guess Rwanda, we've got a lot of opportunity there. We've got a good footprint with our spirits and beer business, but there's lots of opportunity for growth. We would be low, medium, single-digit market share there. So Rwanda, which has got a strong economic structure and governance structure within the country, is a great opportunity for growth. I mean, you saw in the results that the South Sudanese business took a significant rebase with the disruption that's been in that country. However, what we've also done is recognise that the country is rich in natural resources and minerals. It's got oil, it's got agriculture, it's an exciting medium to long-term prospect. And so the decision we took was not to actually pull out of the country, it was to rebase our investments. So we've still got brands available in the country, we've still got distributor relationships, we're still spending advertising and promotion, and we've still got a presence there. And the reason we've done that is because when the country does come back, we absolutely expect to be the first to get back into the country and fully service the South Sudanese citizens who love our brands.